Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, July the 19th, 2010. And like we do every night, let's take a look at the charts. Let's start off looking at the Dow Jones Industrial Average. It's a 6-month chart. Each candlestick is 1 day. And we've got all kinds of stuff here to back our bearish position, and nothing's really changed here. The market did close up 56 points for the day. The Dow Jones did. But the trend is still, the signals are still to short it. Yeah, from this point up here at the 80 or higher on the slow starts, you're overbought. You want to be looking for opportunities to go short, not long. Okay, that doesn't mean the market cannot bounce around on you and go against your call and so forth and so on. That can happen. We're swing trading, not day trading, and we're seeing lots of counter trends. This is a counter trend. Okay, counter, counter, and counter. Each one of these items are backed by very low volume though, and they end up breaking down. Okay. Something else to note about this move to the downside here, it's a continuation signal, so we know the move is actually going to go lower anyway, and today's activity is not a hammer formation, so we know this is not a true bottom, but even that does not mean it still cannot bounce higher against you the following day or the next day, so forth and so on. So keep that in mind, okay? A lot of people look too close at one day to the next data. That doesn't really matter. The overall trend is down, down, all right? Lower series of high points, lower series of low points. All right, this is all you need to know. You're just looking to trade that pattern. All right, and to do that, you look for the bounces and you short them. All right, very simple, very cool. Also, have a look at Friday's sell-off. You'll notice that if you scroll down, look at that volume, there it is again. Consistently, we're seeing the same thing over and over and over again. Major sell volume by institution activity. They are selling this market. They are not buying this market, and I don't blame them. Even on Friday, okay, the counter trend moves here, 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 all very low, comparatively low, weak buy volume. This is just retail guys buying, not doing any better, okay, or traders, that kind of stuff. The end result is a big move lower. The volume stacks that way. That's how the scale is going to fall. Okay, if you've got 50 pounds on one side and 2 pounds on the other, you know what the scale is going to do. So by looking at the volume, we know what the scale is going to do. Okay, same thing. The main reason why you know that anyway, if you just consider the fundamentals, what is driving markets higher? What is a catalyst for? Let me get the right. What can cause this to just rocket up here? And just keep going, keep going, keep absolutely nothing. We have no data that could be the catalyst for that. All the data we're getting right now is second quarter data about what happened back then. The forward-looking stuff that we're getting from that second quarter earnings is actually bad. It's telling us to look for more weakness in the economy, which our economic data that we're getting out all week last week and all week this week is the same. It's telling us more bad stuff, but we're still getting spurts of news here and there. Speaking of which, on Friday, the your bank stress tests will come out. Let's be honest here. They're not going to come out and say, our banks suck. We made all kinds of bad investments. We're going in the crapper. They're not going to say that. So what do you think they're going to say? They're going to rosy it up. They're going to, do whatever they can. They'll say we need to raise some capital, but nothing all that major, so we already know what's going to happen. And a lot of retail is going to hear that news and say, oh, yay. And they're going to go buy stocks because they think it's all over. It's not. All right. The overall trend is lower. The chart is telling you, if you look at the signals, quick look at them again, overbought, okay, based on price activity. Doesn't mean the price of the markets can't continue to go higher. It just means you would short it, all right? You've seen it before, all right? But remember, it doesn't have to bounce up here and then bounce right off of it, bounce up here and bounce right off. It could do this for a little bit, all right, before the big move lower, which would mean this could actually do this for a little bit before the big move lower, okay? So, don't smother your positions. You know what the chart says, you know what the fundamental data says, play accordingly, all right? Very cool. One more item I would note about this chart. Last week we told you that they had all kinds of resistance levels. You had the upper Bollinger Band line. You had this level at which smart money was shorting. This is the price at which they're willing to short very strong. That puts a ceiling on bullish price activity. You also had the 200-day moving average. You also had this previous high point. Well, all of that's still there, but now you've also got the glass ceiling of this condition here. And again, let me remove all that. you've got a new resistance level due to this move here that peaked out and then pulled back down. This creates another level of resistance, okay? So now it's even worse condition than it was the week before. And if you take in the fact that we just downgraded Ireland and Hungary's having its issues and all the other more, or I should say it's the same fundamental problems we've been talking about, but it's just growing worse and worse like we've been saying it's going to, we have no real reason to be bullish, whatsoever. So keep that in mind. I know that the mainstream media here in the U.S. is kind of avoiding those topics, and they're pumping earnings and everything else. But you have to be smarter than that, all right? So you know what the signals are, you know what the fundamentals are, you know what to do. One more item you need to be aware of. This is a long-term chart, 4-year chart of the Dow Jones Industrial Average. Each candlestick is 1 week. Basically, I want to draw your attention to the weekly activity of last week. It formed an inverted hammer. That's a sell signal, and it's on the long-term chart. You hear us talking about the odds here all the time. We're saying, the odds of this signal and the odds of that signal, and we stack the odds in our favor. Here's an odd for you, okay? I have never seen an inverted hammer on a chart that didn't concern me. Okay, in all the years I've been trading and doing this stuff, I've never seen one and said, it's okay, don't worry about it. You need to take that. If you're a bull and you see that, yeah, you know everything you need to know. There's a problem. If there wasn't a problem, look, when you advance like this and then you sell off like that, the sell-off is to alleviate sell pressure. So when you bounce back up, you shouldn't get an inverted hammer because that tells you sell pressure is still right there. So if you're getting that inverted hammer, it's telling you sell pressure's not been relieved. That means you will have to go lower, which we know anyway. If you look at the signals, we've talked about these before, the RSI low point here, RSI lower low here, showing a downtrend. These low points correspond with low points on your chart. See? Here, here, okay? Now this is showing an uptrend. Back in 2007, price was lying to you. It ended up doing the same thing the RSI said it would do. Break below this low. Dun-da-da, pierced it, broke below it, okay? Now that does not mean it cannot have little counter trends, all right? It's going to have those. But the big money, the smart money, the real money is in the big move that's coming up and it's being signaled by the RSI. Back here you had the exact opposite, all right? You're showing an uptrend. Here you were showing a downtrend, all right? You could have noticed that, traded that to the upside. Here is the current situation. Here we are, what was this, July of 09. And now the current situation, we're showing a downtrend while price activity is showing an uptrend. And that means it's a lie, and in fact we'll do this, which we've just proven we'll do that anyway based on that inverted hammer signal. So all the signals are there, all right? If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, you refer a friend. That's very cool. Also, if you don't mind subscribing to our YouTube channel, we'd appreciate that. And if you don't do it, we'll hit you with a brick. Okay, also, all week long, we're going over swing trading in our live trading course. You can go to our website, learn about that, and anybody who signs up for next month's course gets all the rest of this month for free. Awesome! Let's move forward. The disclaimer. Read it and weep. God bless. Enjoy the evening. Keep making that money. Play smart.